Hey folks, Alex here, 9 to 5 to Freedom. In today's video, we're going to talk about the market. September, we saw a little bit of a pullback this morning. What's happening in the after hours? Are we positioned well into the fall months with some rumors of a slight correction? What my thoughts are. Also, what I'm doing by diversifying my portfolio. I'm going to show you how that's going on some of the new funds that I've been purchasing. And I'd really like to hear some of your thoughts. What are your favorite funds that you are diversifying outside of tech? So we're going to talk about that, and I'm going to give you a snapshot of how the portfolio is doing today. So without further ado, let's hop right into it, folks. All right, so the market today, a little bit of a pullback during the day, but as you can see here, after hours, we're climbing. There's some news around Google. Looks like they don't have to sell Chrome. They don't have to split up their company. Something about judge ruling, and that's really helped the after market climb back slightly. Now, there have been a lot of rumors of September being one of the worst months in the year. I've done a little bit of research, folks. I've come to the conclusion that it's all a coin toss. It's really tough to know the future. There's about a 45-55 chance. So 55 chance of a pullback, 55% chance of a pullback, 45% chance of a green month. So really tough to say what's going to happen. And again, this is why we're talking about diversifying. What can we do to diversify? I know a lot of folks have left comments on my video saying that I'm not well diversified. And everything I take, folks, I look into everything you guys criticize, any positive or negative feedback that you're leaving me. I'm always looking into it. So I'm going to talk about that. Let's just hop into today's portfolio here. And for those folks who are new, basically this portfolio, I have roughly about $250,000 of my own money invested. Now, one of the cool things with Robinhood is that it offers very low margin interest at 5.25% if you have over $100,000 on margin. Now, if you look over here and we click on the buying power, you can see the breakdown here. You can see that total available margin is $430,000 and I'm using $229,000. What's cool about it is that the margin maintenance on a lot of these funds that I'm investing in are all 25%. If you need help understanding margin maintenance, I have videos on that. Folks, I don't sell e-guides. I don't sell any courses. I don't take a single penny from anybody. I'm just here sharing my journey. None of this financial advice. Do everything at your own risk and seek professionals for all of your investment needs. But I'm just sharing my journey, and I think that's the only fair way to do it. So as you can see here, this is my rate here, 5.25%. You can see the amount of margin I'm using. The margin maintenance requirement is $120,000. And you can see I have a buffer of $127,000 right now. So if all of my tickers go to 50% margin maintenance overnight, I will still be in good shape. Okay, let's take a look at the portfolio, all of the tickers and the breakdown here. My largest position, these four funds, I call them my Dividend Avengers, XDT. I have 2,350 shares. Okay, this one pays on a weekly basis from Roundhill. This is on the S&P 500, 0DT options trading. And this is one of my favorites, QDT. This is on the NASDAQ, 2,600 shares. Maggie, the Magnificent 7, again from Roundhill, close to 1,400 shares there. YBTC, 1,100 shares. And this is on Bitcoin. Now, Bitcoin's been a little bit on a decrease, but in the last couple of days, it's actually been picking up. Let me just take a look at the price right now. What are we doing? Oh, look at this. We are up to $111,000. So in the last 5 days, we're almost 3% up, which I do like to see that. Now, I have the rest of the tickers here. If you guys want to know more about the rest of them, check out my other videos where I talk more about that. But what do I want to talk about? Well, I want to see how do we diversify this portfolio. Now, before I get into that, I'm just going to show you my dividend tracker, folks. Now, there's folks who sell dividend trackers. There's folks who charge you monthly memberships. What I did, folks, is I created a video where I teach you how to do this in Google Sheets for free. It's very simple to use. And once you teach somebody how to fish, they can fish and feed their family forever. So that's what I have out there. So make sure you check out that video on how to make your own dividend tracker, because everybody's tracking different stuff. Everybody wants to see a different setup. It's very simple formulas. I think if you just spend 10 minutes, you can create your own, you can save a bunch of money, and you can actually save your money from buying somebody else's tracking sheets and actually just buy YouTube Premium. Okay, so you can see here, these are the dividends I'm getting every single week. And on Friday or Saturday, I publish the end of the week and the dividends that I'm receiving. As you can see here, XDT is making me around $500 a week. Same with QDT. OLT is a position that I've repositioned in. I have about 5,500 shares. That's making me about $460 a week. And YBTC is making me close to $500 a week. And Maggie is making me almost $500 a week as well. So between these 5 funds, folks, I make $2,400 a week. Now the other ones here, these are all the monthly payers, and I did purchase some additional ones that I'm looking into, and that's what I wanted to talk about today. So how do we diversify our portfolio, or my portfolio? If you look at my portfolio, you can see here largest positions in here are very tech heavy. So let's just take a look at market value. We'll scroll up. Okay, so XDT, S&P 500, lots of tech funds. QDT, lots of tech funds. Maggie, lots of tech funds. Bitcoin, QQQI, again, tech. SPY, lots of tech. OLT, lots of tech. W, this is fintech, so that's on Hood. GPIQ, again, very techy. Anyways, if I go down the list, I have a lot of tech stuff. Anytime tech goes down, my portfolio just gets hit really bad, folks. We finished the week last week. I think it was like around 250. We had a drop of $2,000 today. Overnight, it looks like we've climbed up slightly, $780 up. But really, that's part of the problem if, we're very bullish on tech. So I started to look, what else can we get? So I started to navigate through the NEOS website. Now, I do hold a lot of NEOS funds. QQQI, I have some SPY, BTCI. Those are some of my favorites. But I wanted to see what else do they have. And I came across this IWMI. This is the Russell 2000. So look at this. This pays 14.5% every single year. And they pay on a monthly basis. Slightly lower expense ratio than the average of, let's say, around 1% from a lot of these fund managers. And we'll just pull up the historical on here. So what is that called? IWMI. We'll just take a look at this one here. This is, again, Russell 2000. Look at the maximum. So this fund's fairly new. It came out a little bit over a year ago at $50 a share, June 28th. Looks like we're 5% down from that inception price. Look at this. Back in April, tariffs were down to $40, and we're seeing a climb up in the positive direction. We're only $2.50 from its launch price. So not too bad, considering we're going to get exposure to the broader market, and we're almost getting 15%. So this is one that I bought a few shares of. And let me know what you guys think. Do you guys buy any Russell 2000? What do you guys think about that? Exposing yourself to other things other than tech. So that's one. And let me just take a look here. Did I buy any of these shares? I can't remember what I bought today. Yeah, I just bought one share, folks. That's all. I just wanted to track it for the day so I can see if I want to get some more. Now, the other thing I looked at was gold. As you know, that with the erosion of our currency, the dollar, American dollar, gold's been on a rise. Now, there's a fund that NEOS has again. And I'm not sponsored by NEOS. I like a lot of their funds, and I think they do a well job of providing a lot of diversification into, if you go to their ETFs, you can see all the different ones that you can get. So this one is 12.56%. So 12.5% pays a monthly basis. Expense ratio is slightly higher at 0.78%. And let's just take a look at historical performance. So we'll just say IAUI, I believe that's what it was called. NEOS Gold High Income. Look at this, the maximum chart. This came out June 6th of this year. Just came out a few months ago, folks. We're up 2.61% since its inception. So again, if I think just like anything else, if Bitcoin goes up, BTCI goes up, I think the same thing is going to happen with this NEOS fund on gold. We want to see the underlier move in the positive direction to see us getting those dividends and also seeing at least flat or slight appreciation on our underlier. Now we're getting 2.61% since inception, not bad. We'll just take a look at gold price. We'll see how that did in the past couple months. We'll just see here what we got. 6-month trend. Look at this, gold is up 24% in the past 6 months. That would have been a great investment, folks. Maybe we should have all been buying gold instead of OT. Look at this, year to date, 35%, folks. Gold is on a rocket ship. Look at this. What do you guys think? Do people don't believe in the dollar anymore? Look, since 2023, we went from 2,000. Oh wow, we're almost double that. We're just $400 away from doubling our investment. Yes. So I think I want to get a little bit of gold. Now, folks might say, well, you're buying all-time high. Again, folks at any point would have been buying all-time high in the past couple of years because every time seems like the next all-time high. Again, DCA I think is very important. So I bought a few shares today just to put a ticker in here. I actually only bought one share, but doesn't matter too much. Let's move on, folks. Now, again, this doesn't diversify out of our tech industry, but I never even paid attention that NEOS offers these two other funds here, and they're called Hedged Equity Income, QQQH and SPY-H. So we'll take a look at SPY-H here. What is this? This is a hedge equity income. We'll take a look here. Aims to offer tax-efficient monthly income through data-driven option strategy. Fund offers a measure of downside protection via a constant fully financed market hedge that seeks to reduce downside risk. So I thought that was interesting. Now, what really blew me away was when I pulled up the chart. So this doesn't pay a lot, folks. Those who are seeking OT type of returns like 80%, obviously you won't be really excited with a 7.89% annual return. But those folks who are a little bit more serious and have a little bit more substantial money and less of a YOLO, I think this might be an interesting play. So let's take a look at SPY-H just on our chart. SPY-H. And if you guys buy SPY-H or QQQH, let me know in the comments, see what you guys think. All-time chart. This just came out back in April. Look at this, 16.5% appreciation since April. Now, obviously, April was at its lowest. But on top of that, SPY-H also pays 7.89%. So, very interesting, having a little bit of a downside protection. Now, what did it do today? Do we have a one-day chart here? I don't know why it doesn't tell me. 5-day, we're down 0.31. So let's just take a look at the SPY-I 5-day. And 5-day, we're down 0.17. So obviously, correlation is a little bit different here. I don't know why we would only be doing worse than SPY-I, but anyways, I bought a few shares of that. I'm going to track it. I want to see how, it's very new, folks. I want to see how it does. Next one is QQQH. Again, another hedge one. Very similar, pays slightly more, just like QQQI pays more than SPY-I. Again, you're only exposed to 100 different tech companies. And we'll just take a look at what the historical performance is of this one. Maximum, this came out, ooh, look at this. QQQH has been around the block since 2019, folks. And that's crazy. So it started out at $50 a share. A huge drop back in 2022, right? And then we see the blip here back in 2025 in April tariffs announcement, $45 a share. So not bad. Overall, we're still climbing. We haven't recovered really our highest point in 2021, which is a little bit concerning. I'll just be honest and I'll be upfront there. What happened there, guys? But 9.5%. I bought a few shares. We're just gonna take a look at it. So those are the interesting ones that I got into today just to get them on my ticker. You can see here SPY-H and QQQH. The other ones here, EggQ and Eggs and Eggy. I got these three funds. I've talked about them before. I'm sitting roughly around 70 shares each one of them. So so far it hasn't been too bad, but I really need to track them a little bit longer before I want to do any type of review on them. So let's take a look at just EggQ. EggQ maximum time 11.5%. Looks like growth. This came out January 3rd. So not bad for the year, folks. 11.5% since January. And you're getting a dividend. And EggQ, again, this pays an annual dividend of, if this would only tell me somewhere here, 21, was it? That can't be it. NAV. Well, we'll do the math, folks. 21 cents a share times 12. So we'll just add that up. Yeah, so that's only about 5.6% per year, which is not, it's not a huge amount of money, but you are getting some of that appreciation. Now, if you want a little bit more income, I think Eggy is the one that you want to get. And this one pays higher dividend per month. Let's see. So yeah, so this one's paying 81 cents, between 80. Looks like they even had a 94-cent distribution. So obviously a lot more, a lot higher dividend, but you are getting probably a lot less appreciation. We'll just take a look here. Eggy stock, year to date, we are down 5.29%. You can see a little bit of different approach between the two. So anyways, once I have those for a few months, I want to do a review on Eggs, EggQ, and Eggy, and just talk about those funds a little bit more in depth than what we've seen. So Alt is a popular one we talk about here on this channel. I think folks who are holding a lot of Alt obviously track this on a daily basis. 5 days, we are down 2%. We're floating around $5.63 a share right now. And yeah, so I don't know. What do you guys think? You guys still bullish on Alt, or are you giving up hope? I think last payment was actually under 10 cents. Okay, so that's what I got for today, folks. I think I've covered everything. I showed you what my portfolio is doing. And if you guys have any questions about anything that I'm investing in, make sure you leave a comment below. What do you guys think? How do you diversify? Are you buying REITs? Are you buying stuff in the real estate market? Are you buying oil? Are you buying other consumables to try to diversify out of the tech stuff? And I'd like to hear your comments. Again, thanks for watching. Thanks for subscribing. We had a lot of interactions on this channel, a lot of growth that we've been seeing, so really appreciate that. Hope everybody has a great evening, and stay frosty, folks. Let's make some money. Take care.